In this video, I'm going to walk step by step through a well-designed financial plan. Now, what's driving this? If you're a client, then we get that question a lot. Like, what is a financial plan? What should I be looking for? If a financial advisor says they're going to create a financial plan for me, like, what is it that it looks like when it's done? And why does it matter to me? Okay, so there's the client perspective, which we've studied quite a bit, actually. What do clients expect when they think financial plan? But also the industry needs a little help with this as well. I'll give you two perspectives on this. The first perspective is in the financial planning training in our industry, and there's quite a bit of it, including the training for the certified financial planner designation. There's a lot of emphasis on the financial planning process. It's quite well documented and it's thorough, but there's less documentation on what we're talking about today. What does a well-structured financial plan look like? What's in it? What is it? So we're going to go through that. The starting point, I think, is, have you ever wondered what financial advisors did prior to computers? So I got into this industry, the financial services industry, on April 28th of 1981. Now, the only reason I'm telling you this is because this is before personal computers. Today, financial plans are often created on financial planning software. When a financial advisor creates and presents a financial plan to a client, often it's the output of the financial planning software. There's lots of charts, lots of graphs, lots of tables, lots of client education. In other words, why things are done certain ways, and maybe a little education on, I don't know, what compound interest, whatever. So there's quite a bit of financial planning in the current era, which is driven by the software. A well-designed financial plan is not software, and it's also not reports. So I'm going to go back and I'm going to describe how financial plans, or financial strategies, as I like to call them, were created prior to personal computers, because that will give you a great contrast and an understanding of what you should be looking for today. Because things have really drifted away from the basics over the last 45 years with the advent of software and things to make financial planning a little bit easier. Back before personal computers, if you went to a financial advisor, you're a client, and you say, hey, I need a financial plan, there would be a little discussion over, what do you mean by plan? In the traditional way of looking at financial services, there are quite a few areas of finance that need planning. So you have tax. So I think we can all agree that there should be tax planning, which is to say forward-looking game plan for how to what's the objective? Reduce taxes. There should be a money management strategy. So how am I going to deploy? How am I going to allocate my assets? How am I deploying my money that I'm focusing on my future? Money management strategy. How about estate planning? I'm not going to live forever. Almost a worst case scenario would be something happens and I'm unable or unwilling to manage my own assets. Maybe I'm old, or maybe some medical event occurs. So what happens if I'm unable to manage my own affairs, or someday when I die, what happens to the assets? So there should be an estate plan. Would you agree? And there should be, of course, a plan around your financial objectives. Today, we call this financial goals. You might say, I want financial independence someday. That's a goal. A goal has several elements. It has the name for the goal, financial independence. But for planning purposes, it needs two additional things. It needs an amount of money that's tied to that goal. So how do we know when we've hit the goal? So a client says to me, I have a goal of financial independence. I said, what does that mean for you? Like, how much money do you need to have coming in, either per month or per year, for you to feel financially independent? To which they say, oh, I don't know, if I had $25,000 coming in after tax on a monthly basis, I'd probably be doing okay. I'd feel financially independent. Okay, so we have the name of the goal, we have the amount. The only thing missing is the target date. So when would you like this financial independence goal to occur? Like by what date? And a date is not some rough time range. There's a point to this that I'm going to get to when it comes to the structuring of the plan. But you can't say, oh, I'd like to be financially independent by the summertime 20 years from now. Okay, so that's too vague. No, it should be a month, a date, and a month, a day, and a year. A date is something you should be able to circle on the calendar. Now we're cooking. If we've got the name of the goal, we've got the amount that tells us that we've achieved the goal and the target date for which we need to achieve this goal. Now we can create a plan. Yes, you should have a financial plan also around your financial goals and objectives. And then once you've got all this other planning in place, tax, estate planning, money management, financial planning, I would say there's one additional plan that needs to be a component here. That's a plan for risk and safety. Now that there's plans in these areas, what happens if something goes wrong? Or another way to say it is, now that we have a sensible plan in place, should there be a plan for disaster? Like what could go wrong? Shouldn't I have some thinking around how do I increase the safety of this plan? Or what happens if something goes horribly wrong? I don't know, financial markets really become chaotic, or what happens if world events, what if there's a nuclear war or something? Whatever the case, then I would say, yes, there should be a plan for contingencies in the event of something horribly going wrong. What's the plan then? So that includes having a margin of safety just in case, and various contingencies. Think of it as a fire drill. So yes, you should have a fire drill, part of your plan that sort of addresses what happens if things start going wrong. There's your plan in the basic structure. So I'm going to walk through it in a little more formal basis, but I want to sit down and go back to this idea of what happened before computers. Before computers, you'd sit down with a financial advisor. It could be your tax accountant or your estate planning lawyer or your stockbroker. There weren't a lot of financial planners around back, what we call today, like a certified financial planner. That didn't exist really when I got into the business. But you had people managing money. You had, of course, insurance agents, people that are dealing in various areas of finance. And a client could approach any one of them and say, hey, I think I need a strategy. Then if it's a good conversation that's really thorough, then it's an acknowledgement that I need strategies in basically 5 areas. I need financial planning for my goals, money management to deploy my assets to achieve my goals, properly allocate my assets. I need a plan for taxes. I need a plan for my estate. So if I'm unable or unwilling to manage my own affairs, or if someday when I die, what's the plan? Then a plan for risk and safety. And that also includes an assessment of the insurance that you've currently got or should have. Okay, so let's say those are the 5 areas. So you need a strategy. So let me pause for a minute and say, what's a strategy? This is where I think we start to go sideways. So if you ask a professional today, I'm saying any in these 5 areas, you go to a tax accountant, or you go to an estate planning lawyer, or you go to your certified financial planner, or you go to your chartered financial analyst or your money manager, or you go to your insurance agents or your insurance experts, and you say, I need a strategy and I need tactics. Then the question becomes, and this never used to be an issue 40 some odd years ago, but it starts to become an issue today. What do you mean strategy? What do you mean tactics? See, before computers, this was the given. We didn't have computers, so there was no data entry, and there was no like press a button and all these reports come out that look beautiful and they're already well thought through. No, you had to sit down and create a strategy and tactics. So what does that mean? For just my definition for our purposes in this video is a strategy is a game plan between 2 points. Let's call it a game plan to take you from where you are now to where you want to be. And it's a different point B, and it might be multiple point Bs, but you're trying to get from point A to point B, C, D, E. So, and it might be a different objective, and it will be a different objective depending on which plan we're talking about, the tax plan or the estate plan or the financial planning plan focused on the goals. So just for definition, a strategy is a game plan where it's explained to you as the client, kind of high level. Here's how we're going to get from point A to point B, where you are now to where you want to be in each of these 5 areas. Okay, so what are tactics? Okay, so if strategy is the game plan, the high level of how we're getting from here to there, then tactics are the actions required to implement the strategy. So think of it as the strategy kind of lays out the directionally, here's how we're getting from where we are to where we want to be. And the tactics are do this. In order to get there, right here, right now, you need to do this, that, and the other. So think of it as action items, or these are the recommendations. So when you go to, I don't know, a financial advisor of some sort, maybe a tax accountant, or maybe an estate planning lawyer, they're going to go through a process where they've got a fact finding, sort of a discovery process where they're doing fact finding on your situation, trying to get a clear picture in their mind of your situation, where you are now, to discover where you want to be in the future. So that's all they're trying to do. They're doing this discovery process at the front end to really make sure they understand your situation and where you want to go. Then they will give you some recommendations. So wait a minute. Okay, so if we're jumping straight to tactics, where's the strategy? Well, that's why I'm bringing this up. When a financial advisor says, you need a financial plan, then how do you react to that? How do you clarify this? What do you say? You say, what do you mean by that? To that point, you want to discover, are they talking about like a single element of the plan, tax or estate planning? And you can ask them straight up, are you talking about a comprehensive plan? Are you talking about comprehensively creating a plan across all my areas of finance so that I get from like where I am now to some future desired ideal point? If they say yes, now we're talking about the kind of financial planning that I'm here to describe. And let's change the names. So I don't like the term financial plan. The main reason I don't like it is because it means different things to different people. Because there is no true definition of a well-structured or well-designed financial plan, it means different things to different people in the industry. So when a professional says, let's do a financial plan, who knows what that means? It's not a perfectly defined term in our industry. When a client says, I need a financial plan, likewise, you're not 100% sure what they mean by that. So you have to do a little probing and discovering what they're talking about. So what I'm going to walk through right now is what I would define as a well-designed, comprehensive, written, lifetime financial strategy. I'm going to walk through those words again because I think the words explain what you need to convey to your financial advisor who is telling you you need a financial plan. Great. You can say, I agree. I think I need a comprehensive, written, lifetime financial strategy. So what does that mean? There's 5 elements the way I've defined it. Now, just a warning here. When I discovered in the year 2000 that there was no definition for this term, I sat down with lots of affluent people and families, very affluent people. I just focused on what the client means when they say financial plan. I ignored the industry, or let's put it this way. I put the industry, what they think is financial plan, because it's all over the place, what it actually means. I put that to the side. I focused on clients. So what do affluent clients mean when they say financial plan? So what I did was I created something, what I'm going to share with you here. I created a standard for a well-designed, comprehensive, written lifetime financial strategy. I trademarked it. So we teach this. I've taught this for 25 years. We call it truly comprehensive financial services with a little trademark at the end of that, because I wanted to make sure that it was clear that what we're talking about here is my research, my understanding based on client desires of what a well-designed financial plan really needs to be. All right, so that's my disclaimer, but let me walk through the 5 elements. So this is the way we teach it. I've taught it this way for coming up 25 years, so quarter of a century. The measure of success just for everything that I teach is an increasing client referral rate. When we come up with some financial product or service for our firm, and this is just created for our firm, for our clients. I'm not creating this stuff for the industry. I'm creating these things for my clients. And then back in 2002, one of my business coaches put me out on stage to start sharing some of these things with the industry, which I've been doing since 2002, and I'm happy to do it. But it is 5 elements focused on what clients want most out of this comprehensive written lifetime financial strategy. So the first point is that it's not one strategy. I'm sure you've picked up on this by now. It's 5 strategies. So if you're a client, then if you're looking at a comprehensive written lifetime financial strategy after it's been completed from someone that's been following our methodology, the first thing you'll see is 5 separate strategies. It's financial planning strategy, a comprehensive written lifetime financial planning strategy that is focused on achieving the goals, the client's objectives, financial independence, whatever it is. I'd like to put my grandkids through college or whatever the goals. So the goals have a name, an amount, and a target date, and that's comprehensive written lifetime financial planning strategy. Also in the financial planning strategy, should be an attempt to address major purchases. A financial plan at the end of the day is just making sure that you're making smart choices with your money. So it is achieving the goals, dealing with major purchases in a really smart way. That's the financial planning strategy. Then there's a comprehensive written lifetime money management strategy and a comprehensive written lifetime tax strategy, estate planning strategy. And then finally, when those 4 strategies are created, then there should be a separate comprehensive written lifetime risk and safety strategy, which, yes, it includes an assessment of your insurance. If there's insurance that exists that you should have, that you don't have, it should be addressed in there. But really, the idea of risk and safety is a much bigger one. Are there risks that are obvious in your situation that blow up your plan or could negatively affect your plan? If so, it should be addressed in the comprehensive written lifetime risk and safety plan. So of the 5 elements, the first step is 5 custom tailored plans, one from each area. Your tax accountant, your estate planning lawyer, your chartered financial analyst, whoever your money manager is, your insurance expert, all these experts in these 5 areas have created a separately siloed strategy so that you have strategies in each of these 5 areas. So you should be able, after your financial plan is created, to say, what's my tax strategy? And it should be obvious. So this is the problem where we get into with financial planning software. It's not so obvious when the plan is created and you hit print after the financial planning software has been filled in for a client, and you print out this massive document, which is thought of as the financial plan today. But let's call that a component. Let's say that's an attachment to my comprehensive written lifetime financial planning strategy. But put that aside for a minute. Where's my tax strategy? And by the way, what's my estate planning strategy? And what's my money management strategy? What are the fundamental principles behind the investment management and ongoing management of my money and so forth? For each of the 5 areas, it should be crystal clear what the strategy is in each of these 5 areas. It shouldn't be this kind of fuzzy, commingled, like gigantic plan with charts and graphs and everything that really doesn't specifically make it clear what the strategy is in each of these areas. Nor does it always make clear for each of these 5 areas. We know where you are now with all these 5 areas. Yeah. But the question is, what's the optimal? Where's point B for each of these 5 areas? If your plan doesn't have an individually siloed strategy for each of these 5 areas where it's made crystal clear to you, here's where you are now, here's where you want to be in each of these areas, it's not a comprehensive written lifetime financial strategy. It's something else. It may be very valuable. You may have paid, I don't know, $3 or $5 or $10,000 for this strategy. I'm not saying it's not worth it. I'm just saying it's not what I would describe as a comprehensive written lifetime financial strategy, because that would include at least 5 strategies in at least these 5 areas where it's clear where we are now, where we're heading, and how we're going to get there. What's the game plan in each of these 5 areas? So that's element number 1, 5 custom tailored plans. Number 2 is a lifetime capital projection. So this is generated by the financial planning individual who's putting together the comprehensive written lifetime financial planning strategy. This is actually something that is usually created by the financial planner, but with the input, advice, and guidance of all the other areas. So the financial planner should be collaborating with the estate planning lawyer, the tax accountant, and so forth, money manager, to create this thing that I'm calling a lifetime capital projection. But what is it? All right. A lifetime capital projection, I want you to picture a table with year by year, starting with, let's say, this year, and it's going year by year, next year, the following year. So it's a table going forward all the way to the end of your life. It's year by year, your age, your spouse's age should be evident on there, so that you can see how long is this projecting my assets to last. And then there's inflows and outflows year by year. So every year you have money coming in from somewhere. In your working years, it's coming in from your work efforts. After financial independence, it might be money coming in from your investments and so forth. But you have money coming in, and then you have the money going out, like how much are you spending every year, or when you have a goal, like you buy a vehicle, boom, there's a bunch of money going out. So it's year by year table, inflows for each year, how much money came in, how much money is going out, and then you've got an ending balance. The first thing, and I've been doing this for so many decades, first thing a client looks at on this lifetime capital projection is the ending balance. Here's what I have now, and then they run their finger down the column year by year to see if it's growing or shrinking. Okay, it's growing. That's good. And then, do I ever run out of money? So they keep going down the list. Now, this lifetime capital projection could be 2 or 3 pages long, depending on how young you are. Keep in mind, it's row by row is each year. So if you have a lot of years in front of you, it might be a 3-page projection. But regardless, clients look at that ending balance. What they're looking for is at the end, like when this comprehensive written lifetime financial planning strategy is looking at the big picture, I either never run out of money, or at some point I do run out of money. And that's what clients are interested in. And that's why this lifetime capital projection should be a component of what we're calling the comprehensive written lifetime financial strategy. So you have these 5 custom plans. You've got a lifetime capital projection. And then what else? There should be a plan, again, by the financial planning SME in cooperation with the money manager on your team. But at the very least, there is a plan for cash reserves. So there's an amount of money that needs to be set aside for cash reserves. If there's an emergency, where do I go to get the money? If the house burns down and the cars are totaled in the fire, there's, for example, deductibles for the house insurance, the car insurance. Like, where am I going if there's an emergency? Where do I have cash? The cash reserves plan should be a component of the plan. What is the target amount for cash reserves? And if it's ever below that amount, what's the strategy to fund it, get it up to the par level, that the target? And if it's ever over, like, what's the plan to bring it down to the target level? What happens with that money? So I call that a cash reserves plan. If there's debt, there would be a debt plan. 5 custom tailored plans a lifetime capital projection, a cash reserves plan, a debt plan, if there's debt. And a debt plan should also include not only here's the strategy for, usually it's ultimately getting out of debt, totally debt free at some point, but here's the debt plan, the plan being the game plan and the strategy for debt. But it should also include schedules. So if there's some recommendation, let's say hypothetically, to accelerate the repayment of debt, that's part of this debt plan. There should be schedules showing how that's the impact of that. So here's what you have to pay. But in the plan, here's the debt plan saying, here's how much additional you should pay. Then it's a schedule showing the impact of that you will now be out of debt at an earlier time. And it tells precisely how much to accelerate the debt and so forth. So you have 5 custom tailored plans. You've got a lifetime capital projection. You have a cash reserves plan. You have a debt plan if there's debt, because not every client has debt. Then what's the 5th and final thing? An assumptions page. Every plan really should have, I would say even more than assumptions, the fundamental principles. So what are the fundamental assumptions? What are the fundamental overriding principles behind the financial plan, behind the money management plan, behind the tax plan, estate plan, insurance plan? So I call that the assumptions, but the assumptions should be very clear. So if, for example, the lifetime capital projection assumes you never run out of money. In other words, the ending balance just keeps growing. Someday when you're gone, it's going to be an estate that passes to the next generation. Okay, fine. But what are you using for an inflation rate? So we've seen in the last few years that can be widely wrong. The plan could differ from reality. We could have an upsurge in inflation or something. But the question on the table is, what's the assumption that's in this plan? What's the cost of living increase that's built into this plan, so that if I'm spending, I don't know, $1,000 a month on dinners and eating out, it's not going to be $1,000 a month for that same expense item 20 years from now. So the question is, what are you assuming? So you have the 5 custom tailored plans. You've got a lifetime capital projection. You've got a cash reserves plan, a debt plan, and assumptions, which should include the fundamental principles in each of the 5 areas. Is that it? What's different between that and what is given today or called a financial plan? Today, financial planning is almost always a data entry process. So there's a fact-finding process to ask questions about a lot of what we just talked about right now. Then there's a running of scenarios internally behind the scenes by the professional. Then there's a, let's call it, financial plan that is provided. What's the difference between that software output and what we're talking here? These 5 elements may be a component of that financial plan today or not. I'm providing this to you as a checklist so you can go through and tell your financial advisor, I'm not sure what you mean by financial plan, but here's what I want. You go through and you explain, I want it to be comprehensive. I want it to be in writing. I don't want you to just explain it to me and it's all in your head. I want a written plan for each of these 5 areas. So comprehensive means in each of the 5 areas, they are not only looking at the here and now, but they are looking forward at things that are predictable given your situation with your holdings and your goals. It's comprehensive when it's taking all that into account, even in the future, known action items that may not be right here, right now, but based on your holdings and your situation and your goals, you will be facing these. So it is comprehensive. Each of the strategies for each of the 5 areas explains the overlap with the other plans. For example, the money manager in their comprehensive written lifetime money management strategy, it should address when it's time to sell an investment, what's the plan to assess the tax damage before you place the sale. So there should be in each of the 5 strategies, how their strategy overlaps with tax, insurance, money, all the other 4 areas. So how do we loop in and collaborate with the other areas to make sure that our area is comprehensive? So comprehensive, it needs to be in writing, lifetime. We've said that it needs to envision and describe the strategy for your whole lifetime based on your current holdings and your current situation and your current objectives. We know now that at some point in the future, if you have in the US, if you have a qualified retirement plan, there's a point in which you have to begin taking distributions. So there's an example. There's all these predictable known things. If it's only comprehensive if all of that is addressed in each of the 5 strategies. But the point I'm getting at is today, I think where things go sideways is that when they say we're going to do a financial plan, they're talking about either software or sometimes reports. So some professionals are really brilliant at being able to create a report, a chart, a graph, a table, a report that helps explain how you're going to get from where you are here today to where you want to be in the future. But they mistake the report for the strategy. The way I would describe it is, that's fine. Almost every comprehensive written lifetime financial strategy that follows the model that I've just described, almost every single one of them has reports, but they're attachments to the strategy. So the strategy is not the report. The report is great. Reports make things understandable to clients. But the difference between the strategy and the printed report is the strategy is explaining the report to the client. So it's okay in the strategy to say, the big idea is we're going to maximize your contributions to qualified retirement plans or whatever the strategy is. See attached report. So the report is not the strategy. The report is an attachment to the strategy. Do you follow me? So I think what's happened over the last 45 years is we've drifted away from just a clear understanding, even in professional circles, of what do we mean when we say strategy? What do we mean when we say tactics? When we say strategy, we mean explain the game plan in each of these 5 areas. If you have reports that can really shortcut and streamline the understanding so that I can quickly grasp big concepts, great. Explain what the report is, how it fits into the strategy, and then attach the report. Then you can go dig and look at the report. There are some reports that we train financial advisors to include in this well-designed, comprehensive written lifetime financial strategy. And I'll just run through them because you can suggest this to your financial advisor, or if you're a financial advisor, you can noodle this and think, how would I do that? But we think, and we feel strongly, there should be 5 critical reports that for each of the 5 areas, financial planning, money management, insurance, tax, estate planning, for each of these, there should be a kind of an overarching report that's as close to 1 page as possible, but it could be 2 or 3 pages. The length is less important, other than it should be a critical report attached. We believe that if your professionals really thought about it, there would be 1 critical report, 1 or 2 pages for each of the 5 areas, that a client could learn to understand that report in such a way that they could just take a glance at it and very quickly they understand that area. An example of a critical report for tax might be a tax projection for the upcoming year. So we're trying to get ahead of taxes. For money management, we recommend the critical report there is some sort of an infographic that is a combination of balance sheet and P&L, profit loss statements. We say an infographic because that's what makes it a report. But where are all my accounts? Where are all my assets? Which assets are designed to fund a goal someday? What are the inflows, outflows? If you can create a 1 or 2 page summary that combines the balance sheet with the P&L, I'll tell you, most married couples, if you have a client and it's a married couple, almost always one of the 2 spouses either is weaker on the money part of the plan, or they just don't like it. They don't like money stuff. So these kind of reports, having a single report for each of these 5 areas that's updated at least annually, so that they can take a glance at it, and particularly the spouse that's a little weaker on all this money stuff. But if you can create a critical report, we call these the 5 critical reports. And the issue is, can you come up with a master report, one for each of the major 5 areas that summarizes everything for the clients so they can see whether they're on or off track with that area currently. So 5 critical reports. There should be progress reports attached. If a plan is getting you from 2 points, point A to point B, here's where you are now, here's where you want to be, then the progress report would be, where am I on the journey? Okay, so I started here. I know this is my goal for each of the 5 areas. So where am I now? So the comprehensive written lifetime financial strategy should be updated. We recommend that it should be updated at least fully annually. That means that every time it's updated, you have, here's where you are now, here's where you need to be, and here's where you are in the journey. Progress reports. We created something called the Goal Blueprint, which I think something like this should be attached to the comprehensive written lifetime financial strategy. Picture a 1-pager, but one for each client goal. So let's say the client shares all their financial objectives. Let's say there's 4 goals. Okay, what I'm saying is it would be helpful, not required, but it would be helpful if you attached a report, let's call it a 1-pager, that shows how the client's going to fund this goal, and when the time comes, how the distribution to fund this goal is going to come down. What account do they pull from to fund this goal, or is it coming from several accounts, or what? So I call that the Goal Blueprint. It's proprietary. We've created it, but you can come up with something similar. I'm just proposing that is a report that if you can attach it to the comprehensive written lifetime financial strategy, clients would love it. This is in the top 5 reports that clients love. So it's worth the effort to come up with something like that. And last but not least, a thing that we call the Truth in Fees report. It really helps clients. It's one of the 4 major client expectations, which is transparency. What we call the Truth in Fees report, which doesn't have to be complicated, but it could be a simple spreadsheet, but it shows for each and every holding that the client has, here's what they're paying for that. So we all know in the industry that every investment, product, or service has some fees associated with it. Sometimes they're upfront and fully disclosed and it's easy to find. Sometimes they're buried, hidden inside the financial product or service. So what is a Truth in Fees report? It's a report that you attach that just shines light on all of that. Here are all your holdings. Here's what you're paying, whether you know it or not, on an average annual basis. It's an estimate because we can't nail this down to the penny, but it is the type of disclosure that affluent people expect. They think you're going to be doing it anyway. So I recommend it takes a little while to put that together, but it's worth it because clients, it's part of disclosure and it really is something that clients appreciate. That's pretty much it. Those are the 5 elements of the comprehensive written lifetime financial strategy. There's examples of some reports. If there's any other report that I think clients really rave about that they love, it would be a document location report. And I'll leave you with this parting shot. If you can think of it as a spreadsheet that lists every important document to this client family, and it says, here's where the original can be found, here's where the copies can be found, and links to images of that if possible, if you've got them. But that's a good checklist and the top of everything. That's everything. That we've just described a well-designed financial plan. Can it be short of that, or does it have to be all of that? I think what video is designed to do is for you to think of this in terms of a checklist. If you have a financial advisor who's creating a plan, let them do it. And you can use this video to identify whether or not there's any gaps in the plan. So I'm sure they're doing a great job, best what they think is suitable and necessary for you in terms of planning. But now you have a framework that you can compare that with so that you can identify if anything's missing from your plan. So I hope this helps and wish you all the best. We'll see you in the next video.